Welcome to this special CNBC Africa interview with the president of the Africa Development Bank. I am Wole, Famurewa, and thank you very much for joining us. Over the next few minutes, we'll be speaking to him about the recent intervention of the Africa Development Bank in Nigeria and, of course, the broader African continent. Mr. President, it's a pleasure to speak with you, and welcome again to Nigeria.
Thank you. Good to see you.
All right, so let's talk a bit, first of all, about the intervention into Nigeria specifically. You've described Nigeria as too big to fail, and I think that's a good place to start. Your thoughts about the importance of this intervention and what you hope to achieve?
Well, if you take a look at African economies over the last 10 years or so, they've done very well in terms of economic growth rates, way over 5% in most cases. But of recent, because of the slow growth in Europe and also the slow growth in particular in China, they have been significantly affected. And to make it worse, it's a significant decline in the price of crude oil. And that has impacted those that depend on it as a major source of foreign exchange earnings. And you got Nigeria there, you got Angola there. So these are very tough times for many of these countries. And so basically what we have to do as a multilateral development bank, Africa's bank of choice, is basically to make sure that we can provide counter-cyclical budget support for them to be able to smooth in a number of issues. They've got to deal with current account deficit. They have to also deal with domestic fiscal imbalance. They have challenges in terms of domestic currency depreciation. And so we've got to come in and help them. As I said, Nigeria is way too big to fail. When we had the financial crisis in 2008, everybody said the banks were too big to fail. Well, in the case of Nigeria and some of these countries, Nigeria is absolutely too big to fail. So what are we doing? We've come to say we will support Nigeria. It's going to our board, next month, which is to support Nigeria with a $1 billion budget support program. And part of that also includes a number of policy reforms that have to be done to rejig the economy quite well. And we've coordinated very well with others, in particular on this. But I must precisely say that is actually a cheap source of financing. It will come at about 1.2%, 40 years loan, and also with 10 years moratorium. So this is actually the cheapest source of financing you can get on the planet to do anything. But we believe very strongly in Nigeria. We believe that Nigeria does not have a debt crisis. You see, many people think that Nigeria has a debt crisis. It absolutely doesn't have a debt crisis. You look at the fiscal deficit of Nigeria as a share of this GDP, it's 2.1%, which is well below the 3% that is laid out in the Fiscal Responsibility Act for the country. If you look in terms of the debt to the GDP ratio is 15%, which is quite low. So Nigeria can actually take debt. The question is, make sure that you are not taking very, very expensive debt, and making sure that whatever is taken is used very well to support growth-enhancing sectors, in particular for infrastructure and things like that. And so we've come in here to say that we are going to do that, but we're going to do more than that. Look, Nigeria is, until recently, Africa's largest economy. Nigeria is also African Development Bank's largest shareholder. And so what we really want to do here is between now, this year and next year, we will make investments totaling $4.1 billion in Nigeria. And that will span different types of sectors. It will span agriculture sector. It will go a lot into the power sector. It will support them in also the rebuilding of the Northeast and also deepening the financial markets here in Nigeria. We are a partner of choice for Nigeria, and as I said, Nigeria is too big to fail.
Absolutely, and it's great to hear about the dynamism and the energy with which you speak of this support. But many looking at Nigeria, especially its history, and of course the population, the level of poverty, which we know that the Africa Development Bank has a mission to address. Many are suggesting that the growth rate really is not all about taking Nigeria out of recession. It should go way more than that and move us firmly into double-digit growth. And I just want you to reflect on that point, the urgency for the authorities in Nigeria to move us in that direction.
Well, first and foremost, if you actually swimming and you're in troubled waters, what you want to do is to make sure you survive. It's only after that that you can decide if you want to swim the whole lap and things like that. Right now, what is very important for the economy is to actually deal with the liquidity problem that is there. And that is what our financing and those of others will help Nigeria to do. Now, there are a number of structural issues as well that have to be dealt with. Now, first and foremost, take the structure of the economy. You have oil sector accounting for 10% of the GDP of Nigeria, but it accounts for 98% of the foreign exchange earnings of the country and 80% of the government revenue. So essentially what you have in Nigeria is not about whether Nigeria's economy is diversified or not. Of course, it is already very, very well diversified. So it's not a diversification problem. It's a revenue concentration problem. And so what needs to be done, therefore, is to increase the productivity and the revenue profiles and the forex earning profiles of the rest of the economy, which is the 90%. And so what we believe needs to be done to grow that economy to be in the double digits and to be much more inclusive, as you were saying, is really about incentives. It's to incentivize your way out of a recession. And so that whether it's in agriculture and agro-allied industry, whether it's in solid minerals, whether it is in manufacturing, industrial sector, these are the critical areas that you want to rejig the economy with incentives to be able to grow them. That way, when the country comes out of recession, and it will come out of recession, you have a more balanced economy in terms of revenue profiles. Now, but you have to commend the Nigerian government. The Nigerian government has taken some tough decisions, and it's not easy. And who likes to be a dentist? Nobody, is happy with a dentist. But they've taken two fundamental decisions that I think are very important. First and foremost is the depreciation of the naira. It's a very tough decision to take. They had to do it, and the removal of the petroleum subsidies. Now, these are all very tough decisions, but they have impacts on the reverberations to the rest of the economy. However, you can't miss the opportunity to reap the dividends of the devaluation. The devaluation is supposed to give three major benefits to this economy. First is that the non-oil exports become much more competitive, obviously. Then it is much easier in terms of domestic import substitution because your cost of imports goes up, and therefore the opportunity for domestic import substitution is actually quite high. And in terms of your foreign direct investments coming into the country, it's actually it should be much higher because your dollar goes a longer stretch, right, because of that. However, none of that is going to happen unless you structure incentives. So my message is, yes, spending your way out of recession, but to grow that economy, you need two wings. You need the government and you need the private sector. It's to incentivize the private sector, key amount of incentives to grow it. And I believe that as they also address the critical infrastructure bottlenecks, in particular power and other types of infrastructure, there is no doubt in my mind with a population that's way about 180 million people, rapidly urbanizing country with also rapidly increasing middle class in the country. This is a giant economy, and it can really grow at double digits. There's no doubt about it.
Can you speak more to those incentives? Because so far this year in particular, we have seen a major decline in foreign investments in the country. Even local investors are not participating as they should. So what incentives would you like to see that would really galvanize those investments?
Well, I've had really excellent meetings here with the president, with the vice president, with the economic management team, with the private sector, with the central bank governor. I think, and with the various ministers, Minister of Budget and Minister of Finance and everybody else. But the critical issue is, I believe that it's need first for predictable policies. Once the policies are predictable, investors can deal with all manner of issues, but they got to know what the horizon is that they're going to travel on. I think that's very important. The government is trying with regard to that policy and those policies. And also the government is also trying to put in place new incentives for the critical sectors that needs to be grown. Agriculture, for example. Well, if you have, high corporate tax rate, of 25%, for agriculture sector, it's not going to work. And the government recognizes that. I was very pleased with my discussions with the Minister of Finance and the new raft of incentives that they want to put in, both in terms of tax holidays and so on, for new investors, but in the critical sectors. And I think that's a right decision, to focus not just in terms of generic set of incentives, but to look at your critical sectors and do that. But when it comes to private sector at the end of the day, the key cost driver in this economy is lack of power. It's lack of electricity. And there's no business you can do with this kind of situation where you don't have enough electricity supply. That's why, for us as the African Development Bank, this year alone, we're going to put in about $366 million into the energy sector, looking specifically at projects that can help to generate about 1,400 megawatts of electricity. And for next year, we're going to also put in financing to help about 1,385 megawatts of electricity generation. But to also help the government to be able to deal with the liquidity problem in the power sector, we say we will put in about $200 million this year to help to de-risk the investments of the private sector into the energy sector, the Nigerian bulk electricity trader. But also in terms of transmission, we're going to put in $200 million extra to help the transmission company of Nigeria in terms of the transmission networks. But also the power bonds that are going to be issued by Nigeria, we are going to subscribe into that and help them to be able to boost the liquidity in the sector. And I just must say I'm amazed with the potential you also have in the country for renewable energy. If you look, whether it's solar, whether it's wind and all of that, small hydros. And so we said we will put in place a facility of $500 million for supporting small-scale energy entrepreneurs in Nigeria. So that way, their projects may be able to do anything between 9 megawatts and 15 megawatts of grid systems that are very important. And we will help to support that through this facility. So all I'm trying to say is that there's no doubt in my mind that infrastructure is going to be a big part of solving the problem that you see today and be the foundation on which the double-digit growth is going to have to rest.
Well, let's reflect beyond Nigeria now to the rest of the African continent. And earlier this year, you had mentioned that you think the slowdown is something that we could deal with for 3 years or so. As you reflect on the reactions that we have seen from various governments, how optimistic are you about the future of the African economy?
I am very, very optimistic about the African continent. Look, when people talk about the economic growth rates in Africa, today the whole continent is growing at about 3.6%. It's way above 3.2%, which is the global average. And we project by next year it's going to be 3.7%. And the year after we'll go about 4.2%. However, Africa is not just one country. It's a highly heterogeneous place. You take a look at East African countries. They are growing today at 6.4%. You take a look at West Africa, it's growing about 4.7%. You look at Central Africa, almost 3.9%. North Africa, maybe about 3.4%. The only challenge that you have is in the Southern Africa, most about 1.9% because of the challenges that we had of late in South Africa's economy. But so the point is that we see African economies doing so well, despite the challenges that you have. At the African Development Bank, our estimates show that this year alone, 19 countries are growing at 3 to 5%, and 21 countries growing at well above 5%. Now, if you are swimming and you are able to keep your head that high out of the water, I think that tells you that Africa remains the place to invest in. However, I don't want to just put on rosy glasses here. There are fundamental issues that have to be addressed. You have to also continue to maintain macroeconomic stability. It's very, very important to have that. But also African countries have to get into industrialization. Because when you are exporting minerals, oil, metal, gas, but you're not really adding value to it, you're always going to be susceptible to all these global commodity price volatilities that are out there. And so we at the African Development Bank have just rolled out a new plan to support African countries in industrialization. Get to the top of the value chain. Don't get stuck at the bottom of the value chain. I've never seen economies that will prosper by simply not adding value to what they produce. And so back to the case of Nigeria that you were talking about, that means that what the government is trying to do and also what the private sector is trying to do here in terms of the petrochemical industry is great, because you have 2.2 million barrels per day, but the country doesn't have the capacity to even process 400,000 per day in terms of actual utilization rate. So for Africa to be able to tap on this growth that I see, I think that lighting up of power in Africa is the critical thing. And that's why the African Development Bank, I've said we're going to invest $12 billion in the energy sector in the next 5 years, and working with the private sector to leverage anything between $45 to $50 billion, but also to ensure that we also feed Africa. It makes no sense to me, quite Wole, that Africa is spending today $35 billion importing food. You're importing what you should be producing and exporting, and that's why at the bank, we're going to put in $24 billion into the agriculture sector over the next 10 years. And that's an average of $2.4 billion a year. And that is 400% higher than what we've ever done as a bank. every year in agriculture. So because I really believe that agriculture will revive our rural economies, will allow us to have greater macroeconomic and fiscal stability. It will create a lot of jobs, right? And it also allow us to be able to diversify export earnings for high-value commodities that Africa has competitive advantage in. And of course, save scarce foreign exchange. It's a win-win-win situation all the way with that. So I really have great confidence in the prospects of Africa. There's no doubt in my mind about that.
All right. A final question for me would be, coming back to that point I made about tackling poverty, which, as I mentioned, is a key part of the missions of the Africa Development Bank. While the growth rates you mentioned are great in a global context, in Africa's context, we certainly know that they need to be a lot higher and a lot more inclusive. And I want us to speak to the long-term thinking that needs to go into delivering that. So the large-scale projects, like as you've mentioned, with respect to the power sector, de-risking, all of that to bring significant investments in. I want you to speak to African leaders today and just speak to the urgency that you see, given the poverty rates we're seeing in Africa, the change that can be made if we have more of a long-term oriented thinking and the political will to make those big decisions.
Well, I'm actually quite excited that that political will exists. I think what is needed is to support African leaders to translate a lot of that political will into concrete projects that are executed that will have significant impact. We had the African Union Summit in Kigali, and it was fantastic, the level of political support, whether it's in terms of creating jobs, whether it's in terms of investing in infrastructure, whether it's in terms of human capital development. The political will is there. But, you need more than political will. You've got to be able to mobilize resources to get things done. And so our position at the African Development Bank is that a number of fundamental things are going to be important. First is to create jobs for Africa's youth. Sometimes I look at the, I watch television and I see Africa's youth, rolling off boats, in the Mediterranean. Now, the future of Africa's youth do not lie at the bottom of the Mediterranean Sea. It lies in an Africa that's growing very well, growing fast, in a very inclusive manner, that's able to create jobs, unlock the potential for Africa's dynamic youth and youthful population. Very critical, and that's why at the African Development Bank, I launched just recently, with approval for our board, what's called Jobs for Africa's Youth Initiative. We're trying to provide financing to create 25 million jobs over 10 years. We've got to do it fast, because we're sitting on a time bomb with that in Africa today. If we don't do that fast, with high level of unemployment, especially among the educated youth, the graduates, and all of that, it could be, in fact, the greatest risk to African economies. It's not the economic headwinds that you and I are talking about. It will actually just be the unemployment of Africa's youth. And I think that's what we have to tackle. And for the bank, we're going to invest in ICT. We want to support ICT entrepreneurs in Africa, build the kind of Silicon Valley that Africa should have. And I think Nigeria and other countries have that. In Rwanda, they have that. Kenya, they have that. In South Africa, they have that. And we're going to support quite a lot of that. But also, I am excited to watch some of Nigeria's dynamic youth that are in agriculture. These Nigerian agripreneurs that you have. I was with them yesterday. I was really moved to see how well they're doing in business. And so we're working with all African countries now to do a program that's called Enable Youth, which is going to be a program to create several hundred thousands of young agricultural entrepreneurs for Africa. You've always heard me say this, that the future millionaires and billionaires of Africa are going to be in the agricultural sector. Believe me, that is already happening. So that's the kind of thing that we need. But most importantly, it doesn't matter what we do. We've got to solve the problem of small and medium-sized enterprises, because that's where the jobs are going to come from. And that's why from within the bank, we're doing quite a lot in terms of providing financing to intermediary financing institutions that will lend to small and medium-sized enterprises. But of course, as you solve the power problem as well, most of the SMEs, they will grow even further. But at the end of the day, it's all about women. That's why the bank launched an initiative which I call, affirmative finance action for women in Africa. And it's to mobilize $3 billion specifically for women entrepreneurs in Africa to help them to unleash that dynamism. Because if you get the issues of women right in Africa, you get Africa right, because they're the ones that feed the family. They help the kids and help the husbands, like you and I, and I think that's very important. So that's the kind of Africa I'm looking forward to. One that's growing very fast, one that is inclusive, one that creates jobs for Africa's youth, but also unlocks the potential of our women. You can't fly with just one wing, you got to fly with both.